All the major indices are trading with deep cuts of over 1%. Next week is a crucial week as the US Fed is scheduled to announce its much-awaited policy decision, and all indications do seem to suggest that Janet Yellen will announce that much-awaited, maybe not much-awaited, but much-watched Fed liftoff. The market's bracing for that rate hike. The dollar index relatively steady as we speak, but US Treasuries are on the climb. The 10-year yield is now nearly 3%. At this point in time. It's not a pretty picture across the Atlantic either. European markets have ended with sharp cuts, stocks tumbling in tandem with the US equities, and crude oil prices have also impacted sentiment. Crude oil now has hit its lowest level in 6 years. Prices are down by over 2% as we speak. Brent is below $39 and NYMEX is now trading at about 36, down by almost 2%. Paul Schatz, the president at Heritage Capital LLC, joins us. Paul, appreciate you joining us here on CNBC TV 18. Very quickly, your take on the way that we're seeing the markets fall today. Is this in anticipation of what the Fed may do next week, or is this largely on account of what we're seeing happen in the crude markets?
Thanks for having me. I think this is more the latter. I think this is more the crude oil trade and the crude oil collapse. This is crude oil has been down from over $100 a barrel into the mid-30s, but the recent selling has been relentless. This, in crude oil especially, this is certainly the final capitulation. Throw the baby out with the bathwater, any other cliche you want to use. Regarding the Fed, this is kind of almost as I'm going to script it. If the market sells off into the Fed meeting, which it has, I believe it's going to rally when the Fed raises rates a quarter point at 2 p.m. next Wednesday. So I think this is the most predicted move from being accommodative to being to a tightening phase that we've ever seen. It's baked in the cake for the market. The market's expecting a quarter point. I think we'll get a quarter point. I think the markets rally from that point all the way into January.
Okay, so you're saying it's pretty much factored in and it is a done deal that the liftoff will happen next week. But what could that mean, Paul, as far as emerging market flows are concerned? Because that's what people here in India are going to be watching out for.
Sure, and I think it's the same thing. The emerging markets have been bracing and preparing for the Fed to hike rates. So I don't think there's going to be any added selling pressure just because the Fed raised rates. Everybody who thought it was coming has positioned for it already. The dollar rallied sharply in anticipation of the Fed rate hike. So from there, the question is going to be for 2016, how much the Fed continues to raise rates. And I think it's going to be once a quarter, which will get us to about 1 3/8 Fed funds rate by the end of 16. I don't think that as the Fed raises rates, people are going to begin to panic. I think whatever is happening way in advance of that.
But is there panic when it comes to crude, Paul, at this point in time, and what we're seeing play out in the markets, in the equity market specifically, on account of that?
So I do not see panic in the equity markets at all. I think this is somewhat of an orderly decline. It's also very seasonally predicted. Markets are normally weak in early December. They typically bottom next week, and I do think they're going to. I do think, regarding panic, there is definitely panic in the crude oil markets, and you're seeing. I wouldn't be surprised in hindsight if you learn that a couple of funds were overweighted in crude and had to get liquidated, but this is certainly the capitulation phase in crude. It doesn't mean crude's going back to 60 or 80 anytime soon, but I think crude's going to hit some kind of low, in the next couple of trading days, maybe a week, and then rally, have some kind of bounce into the new year.
All right, Paul, we'll have to leave it there. Appreciate you joining us here. Paul Schatz, their president at Heritage Capital, talking about why the global markets are trending much lower today, and largely on account of the capitulation that we're seeing in the crude markets. But back home,